All right, let's talk about something big. For the first time since, get this, the 1960s, India's entire income tax rulebook is being completely rewritten. We're not talking about a few small changes here and there. This is a total overhaul. So stick with me for the next few minutes, and we're going to break down exactly what this new law means for your wallet, especially in today's digital world.
Just let that sink in for a second. The law we've all been using for our taxes was written before the internet, before smartphones, before any of the digital economy we live and breathe today even existed. So yeah, calling this replacement monumental is an understatement. It's been a long, long time coming. The whole idea here is to finally have a tax system that gets how we live and work now.
So, why the massive change, right? Well, to put it simply, the old law was a mess. It was confusing, totally out of date, and it just led to so many arguments in court cases. The new act is all about swapping out that complexity for clarity. It's aiming for a simpler, digital-ready system. Let's dive in and see how they're pulling it off.
Okay, first up, let's talk about one of the biggest headaches from the old system. The language itself was just confusing. The new law starts right at the beginning, by simplifying the absolute basics. And honestly, this one little change makes understanding everything else so much easier.
And boom, right away, a huge source of confusion is just gone. The new act ditches all that complicated jargon and brings in one simple term, the tax year. It's that 12-month period from April 1st to March 31st. That's it. Simple. One period, one name. Done.
And this slide just shows you how big a deal that is. You see that? We're saying goodbye to the whole confusing mess of previous year versus assessment year. Now it's all just tax year. It might seem like a small word change, but trust me, it's a massive jump forward in making things clear.
All right, now that we've got that simple foundation, let's get to the part I know you've been waiting for. How does all of this actually affect your money, your wallet? Well, as you're about to see, there are some pretty big wins for a lot of taxpayers.
Now, I want you to take a really good look at this number. Because if you're a salaried person in India, this one figure might just be the most important thing you take away from this entire new law. This number, it represents a huge shift in tax relief.
Yup, you're seeing that correctly. Under the new default tax regime, if your taxable income is up to 12 lakh rupees, you pay zero tax. How? Well, it's all thanks to an enhanced rebate under Section 87A. This is a massive relief, a real game changer for millions of people. And the good news just keeps rolling in. So did you file late? No sweat, you can still get your refund. Do you own a second home that's vacant? You're no longer going to be taxed on this thing called notional rent, which was basically tax on imaginary income the government thought you could be making. And for all you landlords out there, your deductions are calculated in a much better way now, meaning you get to keep more of your rental income. Okay, for all the salaried folks, here's another number you're going to want to remember. Think of this as a straight-up discount on your taxable income.
So what's that? It's the newly clarified standard deduction for salaried people under the new tax regime. It's a simple, flat deduction that just lowers your taxable income, which at the end of the day means more money stays in your pocket.
So much of our life and our money is digital now, right? And for the first time, it feels like our tax law is finally catching up. So this next part is all about how this new act deals with technology, digital assets in our online world. You're going to hear this term a lot. Virtual digital assets, or VDAs. The new law makes this definition way broader. They're trying to make sure everything from crypto to NFTs and whatever comes next is covered. So the big takeaway for you? If you're in this space, you need to be super careful about disclosing everything.
Now this is where things get really interesting, because it's a bit of a balancing act. Tax authorities now have more power to look into your virtual digital space. We're talking emails, social media, cloud storage during raids. But, and this is the really important part, there's a new protection for you. Penalties will only apply to undisclosed income they find, not on the income you've already reported. That's a huge clarification.
All right, so the law is catching up with our digital life. And it's also completely revamping the numbers that decide how much tax we actually pay. It's time to look at the big one, the new tax slabs. Let's break down how the rates have changed.
But wait, before we jump in, a super important heads up. These new slabs we're about to look at, they apply to the money you earn starting from April 1st, 2025. This isn't for the tax return you're working on right now. It's a common mix-up, so just lock that date in your head.
Okay, let's break this table down. The column on the left is your income.
The middle column shows the rates from the first version of the new regime, and the column on the right shows the latest revised rates. And you can see the changes are really aimed at helping the middle class. Look at that. The zero tax bracket is bigger. The 10% slab now goes all the way up to 12 lakhs. The 15% slab goes up to 16 lakhs. What does all this mean? It means for the same amount of income, a lot of people are going to find themselves in a lower tax bracket. And that means real savings.
Okay, so we've covered a ton of ground. What does this all mean for you day to day? Let's wrap this up with a quick and easy checklist of the most important things to remember.
So here's your final to-do list. If you're a digital investor, disclose absolutely everything. Crypto, NFTs, the works. If you're a salaried individual, always run the numbers and compare the old versus new regime to see which one saves you more cash. If you own property, pay those municipal taxes on time. It'll help you get the biggest deduction. And for you stock investors, there's a special one-time window to offset old long-term capital losses. It's a limited time thing, so definitely don't sleep on that.
You know, this quote really nails it. This whole thing isn't just about shuffling some numbers around. It's a complete redesign from the ground up to create a tax system that's simpler, clearer, and actually makes sense for the digital India we live in today.
So, the promise is simple, right? A tax system that's easier and more transparent for everyone. The rules are set. But the real question is, when we all actually start using this new system, will it feel simpler? Will it deliver on that promise? I guess that's something we're all going to find out together.